Coming to you live from world headquarters of Concenture Wealth Management right here in nice, hot Houston, Texas. I just wanted to reach out. I hope you're doing well. There's no question you've seen the headlines. Markets have been crazy. The last couple of weeks, we've heard almost every single pundit out there to give their opinion about whether we're going into a recession. We have the fact that the markets are almost all across the board down greater than 20%, which is a bear market. All this different volatility, and I have a feeling that it's probably creating a little bit of concern. If you have a little bit of concern and want to make sure that you're set up the right way, want to make sure that we're taking care of things the way that they need to, don't hesitate to reach out to us, zap us an email. Or if you just want us to walk you through a little bit more in depth what we're going to talk about today, please, that's what we're here for. We'd love to visit with you. But because we've been on the phone so much, I thought it would make sense to reach out to everyone to touch base with you to kind of give you some data points. Here are some things that are really important to think about. First of all, at the beginning of the year, we said we were going for, especially in the first half, to have a volatile first half. That's exactly what's happened. Through today, there have been 68 days where the market has had an intraday swing, either up or down, greater than 500 points. That's a lot. 500 points on the Dow Jones Industrial Average, either movement up or down, it's happened intraday. 21 of those days, the market is either closed down or up greater than 500. That 500 points, that's incredible. So this talk, and especially what we started to hear over the last week or so about recession and about bear markets. I don't know if we're in a recession. I do know how we need to be investing in a recession. We need to have dividend paying stocks. We need to be in quality. We need to have cash on the sidelines. We need to make sure that we're protecting, and we don't want to try to catch a falling knife, and don't try to time it. What you end up finding is that there's a lot that there will be opportunities. We're not there yet. We're looking for our opportunities to create more cash. But because remember, in our newsletter, Bob Farrell's rule number 10, the market, or 7 rather, markets will go with a fast drop. You'll have a quick recovery, and then it'll start a slow downtrend. I think that's what we're looking for. Also remember, rule number 10, Bob Farrell's rules for investing, is that anytime everyone says something different is going to happen. I don't know if we're in a recession, but we're sure hearing a lot of talk. I'm hoping that we have prices start to come down. Federal Reserve is taking a lot of action. They've already raised rates a bunch this year, including just Wednesday, raised it 75 basis points, and for all intents and purposes announced that they're going to raise it again. We need to make sure we're monitoring and managing our bond portfolios, but we have to be prepared for interest rates to go up. We're going to attach in this newsletter. I just was interviewed by Fox Business about some things that you can do. Take a look at that article about what you can do with rising interest rates in this type of an environment with regard to personal finances as well as your investment portfolios. I want to give you a data point. If you go and look at the average bear market with which remember is a decline of 20%, your average total decline in the S&P 500 is 30%. Today we closed down roughly 24%. That means we've got about 6% more to go. So what would that do with the S&P 500? That would put the S&P 500 somewhere between 32 and 3,300. Don't be surprised if we don't get there and then have that significant bounce. We kind of need to get some of that out, because remember, the average of every 14 months, you have the markets pull back 15% or greater, and it's been a long time since we've had it. This is healthy for the market, but we have to make sure that we're managing. You want to managing the risk and managing what we have in front of us. As you're going through and you're looking at the portfolios and looking at where your portfolio is and looking at that, one of the things that we pay attention to is we make sure that we have plenty of cash to meet your living expenses. We don't know how long this is going to last. We make sure that we're in the right type of investments so to take advantage of that. And I feel comfortable about where we are. We're looking for that big bounce that's going to happen. Inevitably it does. Being out of the market and missing that bounce can be very detrimental to a portfolio. But I just wanted to touch base, especially with all this volatility. And if there's any questions or concerns, or you just want to chat, don't hesitate to give us a call. We appreciate it. And I hope you all have a great, cool summer. We'll talk to you here real soon.